Good morning, everyone. Welcome back to another video. In this video, we'll discuss the path for Nifty on a smaller time frame as well as a larger time frame, right? The most important part of this video will be in the end, where I'll be discussing a very important element of trading, which is taking profit. How do we take profit based on not your risk reward or something? I'll be discussing a very different angle of taking profit, how the mindset affects from person to person. So that is the most important part of this video. Why that is the most important part? The analysis we have already discussed throughout the week, and I've been updating my view, my approach towards the structures which have been coming in hand now. What happened last week? We were expecting, as per time inversion, right? If we get a swing low around your 13th and 14th, right? If we get a swing low around your 13th and 14th, what are we expecting? We are expecting a rally in the market till your 20th to 22nd time frame, right? So market is expected to go till there, and we don't know whether market will fall from there or whether market will continue the rally or it will go sideways. That will depend on what is the structure forming here. Okay, so let's quickly discuss that. We'll start with the smaller time frame and then we'll add it up to the larger structure. Okay, so on a smaller time frame, from here, from this point onwards, I've been updating to you guys that this looks like an impulsive structure. Okay, it looks like an impulsive. What is the alternative? So what we want to do is a smaller time frame. Okay, we will check our options and then we will add it to the larger time frame. Is it valid? Which is the most high probability setup, and what are the key levels we must note? Okay, and my strategy I've already discussed. I'll discuss that again. So here, this was a weekly target, right? 21,830 was the weekly target. When we were trading somewhere here, I discussed this. Our weekly target is 21,830, and obviously we got much more than that. Now, the structure here is very simple. I'll go down to a 5-minute chart. It'll be much more clear. So from here, if you consider this low here, let me check the value of this low. I think it's around 21,530. Okay, so from 21,530, if this is your wave 1, wave 2, okay, we are in a wave 3. Okay, this is an impulsive structure. We are in a wave 3. Now, inside that wave 3, we are making your 3.1, 3.2. In that, after that, we are in your 3.3, and this is your value for 3.3. So I told you, what if on Friday we had a gap and immediate fall down, then 3.3.5 is finished. Okay, so the entire thing can change from this part. What happened here is the question. Okay, so in that case, if market just made a normal zigzag correction, that is a different issue. There's another possibility that market may have made some kind of a triangle here. Okay, so triangles are formed in what? Wave 4 or wave B. So this entire our analysis will depend on this wave 4 or wave B that is formed here. So we'll discuss for the first wave 4 approach. Okay, so in your wave 4 approach, what happens here? Let me just get this off. Yeah, so if this is your wave 4, then what? Then we are in your 3.3.5. Okay, so in that case, we are looking for a setup like this. So I gave you the possibilities in this in the market, live market, that you see this. If I've taken wave 4 here, okay, wave 4 here, you can see that the gap up was around your 20,000, 22,000, 24 level, right? This is what I've told you. Near your 0.786, market is directly gapped up, right? So then what happened? Market went in and sustained on the upside. It was sideways move. Simply it means that from here, whatever move has started, wave 1, wave 2, we are in the wave 3. We'll see a small dip or sideways wave 4, wave 5. Okay, so that means this move is still intact. It is not finished yet. All right, now So what is the possible level I gave you? Possible level here for this case, I'll take it as, suppose this zone here, 2286. Okay, I'll keep that in mind. And also this, if this is a triangle, then the fresh wave has started from this point here, right? So I put my extension at this point. Still, what I'm considering till now, I'm only considering that we are in a wave 3.3. Okay, only considering that still. So wave 3.3 is going on still. So here, this zone, so 65, 22, 065 to 22, 127. So I'll just keep that in mind. I'll mark it here. Okay, so I'll keep this zone active. So as long as what, the market does not break this zone, meaning if it does not cross this, there's a very good chance this is just your wave 3.3 if we are considering this as an impulsive structure from here, from the low of 21,530. Okay, very simple. So first action on a smaller time frame we want to see is what, whether the market will sustain, take this as a resistance. So my strategy here, I've told you what, that I am looking for a call option short here. Why call option short? Because in any case, okay, in any case, market is going to show some dip. Now, what kind of dip will come? That will depend on the market, whether it will go dip like this sideways slowly, or will it go fast. Now, the fast case, right? We will see that in the second scenario, but right now, understand this why I chose CE, call option short, right? Because we don't know whether the depth or the dip will come, whether it will come fast or will it become sideways or it will come very, very slow. Okay, so in that case, what will happen if the dip comes and it, suppose we gap up tomorrow or something, and the dip comes very slowly, right? It goes sideways or like this. So this is most likely, yeah. So this most likely will be a 3.4, and then we'll go for a 3.5 by your 20th or 21st. We'll fall again towards the later half of the week, or towards the next week will continue the fall to complete your wave 4, and then another rise will come for wave 5. Okay, we'll discuss all that later. It's far away right now, there's no point discussing. For the next 2 days we have to see whether in the first impulse scenario, whether this zone is taking a resistance. Again, how should I approach this? I know that there is going to be a dip coming in the market, right? So what I have told you I'm planning is, I'm planning for a CE short. Okay, CE call option short, because already from here the put options are short, meaning I have taken longs here based on the analysis. Now again, why did I choose short of put options? Why did I choose option selling here? Very simple. We did not know the structure. We know the target. We are expecting weekly target of 21,830, but we don't know whether the market will come like this fast move or it will become slowly choppiness. Now, when there is this kind of scenario, okay, when there is this kind of scenario where market can do anything, choppy or else slow, so that time it's better to take OTM selling, as per my opinion, because regardless of what happens, you will be on the correct side of the market and it is easier to make money then. Okay, now this is one scenario, impulse scenario. Okay, what if this is not an impulse and this is your A, wave A, this is your wave B triangle, because I told you triangle can form in two scenarios, right? It can form in wave 4 or wave B. So if this is your wave B and we're going to see a wave C, so in that case, what? We'll check the measurement here. Let's check the measurement of possibility of wave C. Right? Let's check the possibility till where wave C can go. So here wave C has to do at least, as per our expectations, 20 to 147. Okay. This is a conservative setup. Wave C, 20 to 147. So as soon as this zone breaks, that is your 128 zone. So this is your 22,065 to 22,128, right? So as soon as this zone breaks, we know it is no longer a wave 5. We know it is no longer a wave 5 from this point. it is most likely it is going to be your wave C. Okay, so wave C can go all the way to 22,147 and beyond. Okay, 22,147 and beyond. Okay, that is minimum, right? We want to see a minimum. I think you have studied the YouTube course. I've told you in many textbooks, everyone say A equal to C. Yes, it is general, but in live market, sometimes what happens, value of C sometimes is only 0.786 of extension of wave A. Okay, so sometimes that happens. So for us as a practical trader, we have to keep this as a conservative target. Above this, anything is bonus. Okay, so this is the case where A, B, C possibility comes in. Okay, it can go all the way to 22, 230 also. Now the value of your value of this wave B is very small. It is complete sideways, so we don't know whether how far it can go. For us, the conservative target is here. Beyond this, everything is bonus. Okay, so everything will depend on the structure here. If this is your wave 1, wave 2, wave 3, wave 4, wave 5, okay, or market takes rejection from this zone and starts to fall. In that case, in any case, both the cases, you will expect this zone to come back and get retested. This triangle zone, right? From where this triangle breakout happened, you expect this to come back and get retested. Okay, 875 to 925, this zone will get easily retested again. Okay, so that is why that was the plan I had for next week, going into next week, because we have the dates also 20th to 21st, as well as some price ranges. Now the strategy is discussed, possibility for the next 2 days is discussed. Now let's look at the larger picture. Now we'll see the larger picture, we'll add it, which is the best scenario for us. Okay, best scenario for us in the larger picture. Looking at the larger picture, if you remember, we had two very important setups. This was one irregular flat setup. Okay, the other setup was market making a zigzag pattern like this, which is the expanding diagonal. Let me zoom out and make it better. Yeah, your expanding diagonal ABC pattern is your wave 1, wave 2, ABC pattern as wave 3, ABC pattern wave 4. Now we are in a wave 5. So the first rule of an expanding. So the first part, your flat correction is still active as long as your previous high is not broken. Your irregular flat pattern is still active as long as your previous high is not broken. Market can simply do this. Okay, market can simply do this. When will it do it? How will it do it? How should I know that before it happens? First, we have a zone. The smaller time frame structure has to be completed. Then we will have what? We will have price pivot zones for intra-week. We can use that also. Everything we know that some dip will come at least till your 875, 900 from where the triangle has been broken. Okay, we know that is going to happen. After that, if it keeps falling, it is bonus. Okay, so first you plan for a conservative setup, and later on, if it crosses that, it's a bonus. Now, simple. Like I said, if this is your expanding diagonal, that is the first case, your irregular flat. Now, if this is an expanding pattern like this, then the length of this move, okay, the length of this move has to be bigger than the length of this move. Okay, so what is the length here? This is 677.95 points. So let's check here. So this has to be 678 at least, minimum. That comes around 22,208. That is the minimum requirement. So currently market is trading around your 22,035. From here it moves at least 100, 200 points is not a big deal for Nifty. 200 points intraday also nowadays it's not a big deal. It's easily moving. So anyway, here point is the minimum requirement will be around your 22,204 level approximately. Okay, to give us a complete at least minimum requirement. It can go beyond that, no problem. This minimum requirement in case of an expanding diagonal. Okay, in case of an expanding diagonal. Now, there was another two rare cases I told you. So I hope the first smaller structure is clear for you, right? This is what I'll be looking for in the smaller structure, this area and zone, to clarify which is the correct wave we have to count. The next part, on higher time frame, ABC structure, I've told you that is a possibility. Another possibility which I mentioned long back was, there was one rare triangle type possibility. It's called either ascending wedge pattern, or you want to call it running triangle pattern, whatever you want to call it. Okay, does not matter. Here, market is doing something like this. If it does something like this, so again, if it tries to fall down till here, it will easily come back to your smaller time frame triangle, which we saw 875 to 900, that zone. Again, it will be retested in this case also, right? So we have crucial time frame 20th to 21st, sorry, 20th to 22nd, that time zone. We have that time zone, plus we have different views, and the minimum requirement on the upside required to cross the downside targets, till where can it come, everything we have set already. Okay, this is one of the rare patterns. If it happens, we'll discuss further. Okay, if it happens. Now, what is the other rare pattern I told you? Another, this is out of the picture, we have to be ready for this, that's why I'm discussing this. So in that case, and this is a second rare pattern, this is your wave A or wave 1 if you want to call it, no problem. Let's take it as wave 1, wave 2, wave 3, wave 4, wave 5. Okay, this is your this is out of the box thinking. This is not necessarily it's going to happen, but again, I'm just, because I know a little bit time analysis of March month also, so I'm just adding up some theories here. Okay, so in this case, if this happens, okay, if this happens, so in this case also, an impulse wave can be justified. Okay, if this is an impulse wave, it can be justified on a higher time frame. If it is not an impulse wave, if it goes for an A, B, one second, let me change the color here. If this goes for A wave, B wave, and again C wave. Okay, so if this also happens, we are justified by the overall structure of the market on a higher time frame also. Okay, this is your ending diagonal pattern. This can happen, it can extend into March or maybe early April also, but again, it's too early to discuss all this. I am just planning ahead before everything happens, so that I'm not shocked by what happens. So everything depends right now on a smaller time frame. In the next 2 days, what happens over here. Okay, the minimum requirements, we know what needs to be crossed, what does not need to be crossed. We'll have a quick look at that again. So shorter time frame, your triangle pattern here, if this is a real triangle in the market, then this is your impulsive move, and then we will likely have a fall again, or sideways fall. If it goes sideways, it's guaranteed that this is wave 4. Okay, 3.4, that is guaranteed. Then we'll go for 3.5 in your 20th to 22nd, and then we'll fall towards the end of the month, last week of the expiry, as wave 4. Okay. We'll discuss that later on, but right now, this is the idea we have, what the reaction market takes from here. Okay, so critical date is coming 20th to 22nd. We'll see what happens then. Okay, so the idea is very simple. A swing high, we had time analysis wise, a swing low, which was made near your 14th to your 13th, 14th. We wanted to see one rally all the way till 20th to 22nd zone, which I've already discussed this on your Telegram group, right? Underground Traders Telegram group. I've already discussed this, but again, I'm just revising it. So it is happening. We are grateful for the market to respect, this kind of analysis we have. Anyway, point here is the strategy is discussed. Your shorter time frame, larger time frame structures is also discussed. This is a lot of information, so it should not be a surprise because you're already practicing Elliott wave market structure. So all this is not new for you. If you want, go rewind it. I have discussed multiple setups, your strategy till where we're expecting it to come, why I've chosen that strategy. Okay, so all that has been discussed. So have a quick recap if you want to again. Okay, so when you go into next week, you must have clarity of what is happening in the market, gap down, gap up, it should not affect you. All right. Now, the very most, the very important part of this video, which I'm going to discuss, is it's called TP, taking profits. Now, taking profits is a very important concept for traders. One second. Yeah. So taking profit is a very, very important concept for traders. Now, what traders face issue traders face is first profit level. Okay. Profit, how much money is shown in front of the screen. Suppose it comes around 1,000, 10,000, 1 lakh, 1 crore, whatever, it does not matter. How much profit can you handle? Okay. Taking profit, when to take profit is not discussed here, because that is a technical, normal textbook approach. When to take profit, 1%, 2% risk reward, 1:2. I'm not discussing that. I'm teaching you something else, right? I'm teaching you something very, very different from here. So first, profit target basis, people take out their profit. Next, whenever they feel like, okay, profit target okay, and discretionary profits, meaning this is enough for me. Like suppose 1,000 I made today, it's enough for me. I made 2,000 today, it's enough for me. It does not matter if market goes higher or lower. If more profit comes, I don't want. This is enough for me. That is discretionary profit, regardless of where the market is. Profit is enough for me. So profit target is different. Discretionary profit is different. Now, in here, what basic approach I wanted to teach you guys here is the mindset of people or traders when they approach this taking profit level or analysis, or whatever you want to call it. Taking profit for a student, right, or bachelor. Okay. Next, taking profit for a family person, who's part of a family or trader, or who has people to take care of household responsibilities, bills, something like that, right? Next, the last one is someone who is retired or settled, financial freedom and all that. Okay. These are the three different categories of people who are regularly into the market in retail community. So there's a student who's a bachelor, who's single in life, who has to take care of himself or herself, right? Family person is that he or she needs to take care of the family, household duties, payments, all that. The last one is someone who's retired, financially independent, or settled in life. So when they approach the market, they have a different outlook. Okay. Everyone has a different outlook of when the market gives you money. Suppose a student wants capital building, he wants to increase wealth. Okay. Student or bachelor wants to increase the size of the account. This is quite common for everyone. It's applicable for everyone. Okay. This is applicable for everyone. CB is nothing but capital building. Okay. Capital building is applicable for everyone, but the most applicable is for these two people, family and a student, right? A student or a bachelor or a family person most likely wants to build capital. Okay. So how should he approach a profit taking? How should he approach profit taking? So this student or bachelor, first one, has to have a very important set of rules to remove profit regularly. Okay. Very important set of rules, meaning it does not matter how much you remove. It can be 1,000, it can be 10,000, it can be 1 lakh, does not matter. But it has to be regular. Okay. Size of the profit does not matter. Please drill that in your mind. Size of the profit does not matter. Okay. Next, a family person, he has some bills to pay. Okay, regularly, month end. So maybe they're looking for a second source of income to build, or something else to increase savings, or beti or bete ka shadi hai, yeah, college fees, school fees, rent, electricity, whatever it may be. Okay. So usually how they analyze taking profit, suppose they made 1,000 rupees or 10,000 rupees profit, they will think in terms of expenditure. Okay. In terms of expenditure, not in terms of saving. People think in terms of expenditure, meaning this is very important. Please open your mind. Don't worry. I'm not telling anyone what they are. You know your honesty. Keep honesty. Just listen to this. Open-minded. Be honest to yourself and analyze it. So the people who is in a family or head of a family thinks in terms of expenditure, meaning what? If I save, suppose I made 1,000 rupees today, I can save this and spend it on something later on, meaning delayed expenditure. Saving now to spend later. You understand? Saving now to spend later. So this is delayed expenditure. So आज 1,000 रुपए बनाए, you book profit. The next target again is to make 1,000 rupees, so that you will build up some saving to spend later. So this is called delayed expenditure. Okay. Or same thing again, 1K profit, I can pay the insurance, I can pay the electricity bill, I can pay Tata Sky, Netflix, whatever. So payment. So do you understand how the mindset approach is different here, right? Taking profit. Same thing. Person has booked 1,000 profit. This person also has booked 1,000 profit, but the mindset is totally different. Now, the retired and settled person, okay? Retired or settled person is booking 1,000. So the capital used by the retired or settled person is extra capital. Okay. So this is the extra capital used by the retired or settled person. So it does not matter much if this guy loses his capital, he's already settled in life. So for him, 1,000 profit is negligible or emotionless. Emotionless, meaning if this was not there, if it was 1,000 profit was not there, it would not make much difference. Life will go on normally. Okay. For this retired or settled person. So this is emotionless profit, non-attached. Now, what is the best approach for these people? Now, what is the best approach? You have understood how people think in different categories. The most important part, I'll remove everyone. I'll put them everyone in a single category called trader. Okay. So I'm going to remove everyone. I'm going to put everyone in the simple category called a trader. Okay. Now this trader has two phases. One is capital building phase. The other one is not capital building phase. Capital building phase is done. This is now profit taking phase, or only focus on returns. Okay. There are two phases now. Capital building phase है, already पैसा है बैंक में बहुत, 10 लाख 15 लाख 20 लाख I'm using for trading, right? So now I'm only focused on returns, regular returns. Okay, RR, regular returns here. Regular returns I want. Here, first trader is in a capital building phase. Okay. In a capital building phase, there are two approaches. You can compound your margin. Okay. You can compound your margin. How? This is a playbook style of approach, which I have discussed already in a video. Okay. I have discussed in a video. Let me just show you again. Yeah. So if you see this, in this part, it's very clear. I have shown this to you in the video also. This is just a snippet from the video. I have divided a journey for capital building from 50,000 to 5 lakhs. Okay. How to, book profit 5,000 rupees, 5 times you have to, 10 times you have to withdraw. So we get 50K each time. Okay. It does not mean every trade has to be 5,000. It can be one trade can be 1,300, right? Next trade can be 800. So next trade can be 1,200, something like that. Okay. So when you reach total of 5,000, right? When you reach total of 5,000, you withdraw this. Okay. When you withdraw this, this will be first time withdrawal. So like that, you do 10 times, you will get 50K total. Okay. Profit. Okay. This is capital building phase using the playbook approach. This is completely mechanical. This is fully structured. Okay. So this is fully structured. Okay. So there's nothing, complex to think about. You know your journey, you know your path. Where are you? Here I taught you that this first round is the hardest, most difficult round. Okay, 5-star rating, difficulty. Method, it's up to you what you want to use. Option, buying, selling, cash, spot, whatever, investing, whatever you want to do, it's up to you. This is the first round. Okay. Here, the only problem you will face is analysis. कौन सा analysis कैसे करने का है पैसे बनाने के लिए. Okay. पैसे बनाने के लिए कौन सा analysis करने का, which I have taught you how to read market structure. Either you're part of advanced concept, either you have studied the YouTube course. It's up to you. Okay. This is a very, very important part. You must understand round one is going to be very, very hard for you in the beginning. Once you believe that, yes, I can do it, slowly, you will do it. Now, regardless of what Nifty, Bank Nifty, 1000 point, 500 point, does not matter. I am in round one. I want to go to next round. Okay. This obviously, as per your capital pocket size, you can change it from 50,000 to 1 lakh or starting point. It's up to you from where to where you want to travel. Your destiny, your starting point, and your journey and your destination. Everything is on your hands. You know what to do. Use this and build it. I will put the link of the video in the description. Have a look at it. Okay. I'll put it in the description, and as well as I'll at the end of the video, I'll put this playbook link. I've shared it many times. Do watch it. Okay. It's very, very important. Now, like I said, the trader has two phases. One is focusing on regular returns. Okay. The other one is capital building. Right. You decide which phase you're on based on whatever your family person or you're running a responsibility for a family, or you're single bachelor or whatever, settled in life. It's up to you. You can, even if you're settled in life, does not mean you're focusing on regular returns. You can also still be in capital building phase. No problem. Whatever you want to do. For that, I'm giving you this approach. First one is the playbook approach. Okay. Playbook approach, which I've showed you. The second approach is now atomic targets. Atomic target. So this one is what? Compounding from small, you're continuously increasing that level. But in that case, you're not withdrawing any money. Okay. In that, you're not withdrawing any money. You are building it again, reusing the profits as capital. Again, you're doing it. So you're compounding your profits. So in this atomic target, right? So suppose you have a target of 5,000, right? You're making that 100 times. Okay. So you're doing that 100 times. In the first one, what is it? You're reusing that profit to increase your margin. Okay. Then you will increase your profit size, your everything 5K will become 10K. If you watch that video, it will be very clear. Okay. In atomic targets, is meaning you have small targets, very small targets. You are multiplying that targets many times. So in gym, what you do, you lift heavy weights for 5 counts or 10 counts. Okay. But small weight you can lift for 20 counts. Okay. Same thing here. So small target of 5,000, you are multiplying it 100 times. So you get the opportunity, you will book 1,000 rupees, 1K profit, 800, again 1,200. Like that, small targets, you reach 5,000 rupees, you withdraw it. Okay. So what you're doing, you're using atomic target model. I mean, you have small targets, you are removing profits continuously of that target size. Okay. Till 100 times you're doing that. Right. Here, you continuously do that. Here you continuously do that till your destination is arrived. You're not compounding profit. You're not reusing the profit. Your capital used here is same. Does not change. Okay. It is same. You do not change it. Okay. These are the two really good approaches. You can do it. Playbook is very good. Like I said, you watch that video, it'll be very helpful for you. Atomic target is just like the playbook, but here you do not reuse your profits. You take the profits, put it in the bank, keep it in the bank. Okay. What you do is multiply your regular profits, the small targets continuously. Okay. That is the idea of atomic targets. Now, the trader who wants only regular returns. Okay. The trader who wants only regular returns, most people who are settled in life comes in this category. Regular returns means they're not interested in capital building phase. Capital goes from 1 lakh to 2 lakh. It does not change the lifestyle so much. Okay. They've already fixed the lifestyle. Everything is settled. They're just trading in the market because they have some free time left or whatever may be the reason. Okay. So here, one second. Yeah. So here, what kind of mindset the trader, or what kind of approach the trader can play. Here, the proper setup, which is in textbook, right? Risk versus reward, or playing based on discretionary profits. When the profit comes, you can take. So let's say you have a 10% target for the year, right? Most hedge funds or big people have 10 to 20% target for the year, good returns on time. So here, what their approach is, have a single approach for trading, single approach for trading. Meaning what? What does this mean? It means you're using only one method, and when it shows up, you take the setup and leave it, right? Based on your, jaise hoga, it'll come automatically a reward. So this is mostly based, this entire regular return profit is based on what? Your method of analysis. Okay, mostly swing traders come here, right? So option sellers, swing traders, whatever it may be. Okay, so the amount of money you make is not going to make a big difference in your life. It is only part of regular returns. Okay, you're just looking to take some money out of the market, that's all. Okay, learn the market, take some money. It's very chilled out phase in your life, right? So this method of trading is simple. It will be like the atomic target, but it's varying based on your needs, right? Based on the setup, market conditions, right? You're not looking for small capital. Whatever money you get, you're just looking for a 10 to 20% return on the end of the year. That's all. Okay. So this is a good way of looking at regular returns. Someone who's already settled in life don't want to exert much pressure. So many people, what happens is they focus on building profit, or chasing some clout, some social, I have done this, I have done that to prove someone. But once you are in this stage, it is better to play conservative and do not lose your family's wealth, your family's generational wealth, or for next generation, whatever. Market can do that. It can take away everything if you're doing something wrong. So it's better to approach in a conservative way and look for just regular compounding of your wealth, or you want to try something else, you can do it. But point here is to safeguard your first capital and approach this as a slow money making machine, not fast. You're not looking to compound anything. You're not looking to remove some money every day. At the end of the year, you're looking to make 10 to 20%. That's all. Okay. This is how I want people to think in terms of taking profits. That is a bigger problem where people face, when to take profits. So if you have a structured model, right, you will know when to take profits. Okay. So I've taught you different things in this video. It's based on mostly on my experience. You can always consult your financial advisor. This is just an educational video, guys. And if you do like this kind of video, please definitely let me know in the comments. And please remember, no matter what anyone tells you, the money you make, money you lose, is everything based or depend on you, your family member, your daughter, friend, or spouse. They won't come and tell, you did this, did that. You are responsible for everything. So it is always very important that you learn, you have proper plan, and you continuously execute based on the plan. Okay, you will learn automatically going forward in your journey what to do, what is good for you, what is not good for you. I've told different scenarios of different people, and don't be unrealistic in the market. Be realistic. Suppose your, let's say, electricity bill comes around 8,000 rupees. You're living in a metro city. AC चल रहा है, 3 AC चल रहा है, 2 microwave, TV, ये fridge, सब. Electricity bill comes around 8,000. So problem here is that everyone, those kind of mindset. What happens is, no, it's not wrong to have 8,000 profit, but if your capital is 10,000 rupees, you're thinking that every month you can make 8,000 from that. No. So this month, chalo 8,000 ban gaya. Okay, now you have 18,000. So what people do is, people think, okay, this month 8,000. If I do this next month also, after that, what will happen? 8,000 again. Okay, this thing I can multiply. So profit multiplication in the head itself, dreaming, that should not happen, please. Everything whatever you give input will be equal to output. So the more you focus on learning the input part, your output will slowly increase. Okay, so this is something when you learn, you can teach it to your children, you can teach it to your next generation, so they don't have to worry about money. They can, do whatever they want in life. You will tell them ki, haan, bhai, I'll teach you how to make money, don't worry, you do whatever you want in life, you live happy. Okay, so we have to take that burden of learning it, mastering it, and then we can tell our family members to live their life as per their wish. Okay, so thank you guys. I'll see you in another video. Hope this video is helpful for you. Thank you for listening all this way, and I hope my inputs benefit you in some way or the other. All right, I'll see you in the next video. Till then, be safe.